Half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne with Annabelle Droulers.
Our top stories. China's top leadership ramping up efforts to revive growth with promises on fiscal spending and stopping the housing slump. The PBOC quickly following through on its easing promises.
Asian stocks falling Wall Street higher as Beijing pledges to support growth. The Fed's preferred inflation gauge is out later for fresh hints on the rate outlook.
Plus, Japan's ruling party about to choose its new leader. We'll look at the economic and geopolitical challenges facing the next Prime Minister.
What a week it has been when it comes to Chinese equities, and you take a look at just the milestones that have been reached, Belle. It's been certainly very crazy for all of us to really see, from the press briefing that we saw earlier to now this Politburo meeting that seems to supercharge more fiscal stimulus. You got to wonder, is this China recovery finally here? Is this the kitchen sink? You take a look at what we saw. CSI 300 set for the best week in 10 years as well. You talk about the market cap of this market. What a day.
I mean, you're talking about $1.4 trillion added to mainland and Hong Kong stocks over the course of just the past few sessions. And as you say, there's really been something for everyone out of this. You've had these measures to support the property sector. You've had them for the stock market. You've had them for consumption. You know, they're really, as you say, throwing the kitchen sink at it. Is this going to be enough? We've seen these head fakes before. Investors are being caught wrong-footed. Does it happen again?
Yes, so we have plenty of commentary. We're going to get through all of that here right now. Here's a market check before we get to that. And certainly it seems like we are likely to extend that Wall Street rally that we saw. We saw a 42nd record for the S&P here on, of course, better U.S. sentiment and on this China stimulus as well. Asian stocks are still hovering around those two-year highs here right now, but we're flat when it comes to the benchmark here as we wrap up the week. U.S. futures also. But you're taking a look at what is really driving these markets, and it's what we're seeing when it comes to the commodity side of things, right? Where you're seeing iron ore, I think we're back well above 100 now in Singapore futures. Steel is catching a bid. Copper is now above 10,000. And Brent, though, that could be another story, just given what we saw with that FT report, talking a little bit more about how the Saudis might be abandoning that $100 target for oil here as they try to regain some market share. Dollar yen's been on the weaker footing there. We got softer Tokyo CPI numbers just this morning here, so maybe adding to that narrative that the BOJ is not going to rush things when it comes to their next hike. And we're watching very closely those PCE numbers later on today on the Treasury market here right now. But Taiwan coming online and seeing some favorable gains here this morning, and we're watching very closely what happened overnight, because you take a look at the Nasdaq Golden Dragon, and certainly it was bullish, right? We were talking about 11% gains for that benchmark alone. So certainly that bodes well for the opening here today. This is what the approach is looking like right now when it comes to futures. And we're watching very closely, right? So hedge funds, largest daily net buying since March of 2021 this year. We have the HSI, HS Tech, 8 shares back to those year-to-date highs here right now. There you go. We're talking about 2% gains on China futures here this morning, and yields are picking up in the bond market. So you are seeing a bit of a rotation there. 213 for your Chinese 10-year yield. And there you go. We're back below 7 for dollar China, Belle.
Yeah, and as you say, hedge fund flows has been something really to track, and perhaps some of that really key commentary, which we can get more on. But for instance, we heard from the billionaire investor David Tepper, one of the most read stories on the terminal this morning, saying he's buying everything related to China. Michael Burry, for instance, someone who kept with his China position even when others were pessimistic early this year. Goldman Sachs, they're also looking at these fund flows. Morgan Stanley is seeing the CSI 300 rising 10% in the near term. Vanguard saying what we've seen so far is just the start of what's going to be many steps. Yuan Fix, of course, one to watch, given you do have that offshore yuan below the 7 mark. Industrial profits data, of course. How much does this stimulus support come up against the fundamentals? What do we really see in the economy going on? Consumption, property stocks, again, off the back of these measures listed so far, released. New World Development, certainly something that's catching a lot of people's attention here in Hong Kong.
Yep, resuming trade today. So we'll see how they react to, of course, the CEO, Adrian Chang, stepping down and what this means for the developer as well. Let's get back to our top story now. China's top leaders ramping up efforts to revive growth and pledges to support fiscal spending and stabilize the property sector and giving new momentum to these stimulus measures. For more, let's get to our China correspondent, Min Min Lo. She joins us now. The fact that we had a Politburo meeting in September, I think it's the first time ever, was something. What stood out to you?
Yeah, I think it's a really extraordinary meeting, right? The timing of it, because typically the time to look at the economy is reserved for the April, July, or December Politburo meeting. So it's the first time that they're doing this in September. That shows the urgency that the government has in tackling the economy. But what really stood out is the tone, especially around the property sector. That readout from Xinhua saying that the mandate now is to stop the decline. That's a phrase that's never been used before. I think it's a clear signal that the window for deflating the property sector is over. The mandate now is really stopping the decline in home prices, the decline in home sales, that downturn that's been going on for 4 years. And then if you look at fiscal policy, the readout saying that the government will step up spending as necessary. That's a little bit vague, but Reuters is reporting that the Ministry of Finance is planning 2 trillion yuan in special sovereign bonds issuance. If that's true, that's a big step up in off-budget fiscal push here. Half of that, they said, is going to be dedicated to boosting consumption, half of that to tackling local government debt. And then monetary policy as well. The readout saying forceful implementation of these interest rate cuts, which again has already been fleshed out by the PBOC, but it's the wording here, forceful implementation, a departure from the past. They omitted the word prudent before monetary policy. The same thing with fiscal policy. They used to say we'll carry out proactive fiscal policy. They didn't use that phrase this time around. So it's just this back-to-back announcements, right? Tuesday, you had the PBOC briefing, and then Wednesday, the measures to give cash handouts to the poor and the 24-point guideline to boost the job market, and Thursday, that Politburo meeting coming together in a very coordinated manner. That's bringing the animal spirits back into the Chinese markets.
I mean, there's no question, really. Policymakers are pulling out the stops on this one. I think what a lot of people are asking, though, is just how sustainable is the policy impact?
Yeah, I think it's still quite mixed right now. The reactions from analysts, there are some who say that this means that China is now on track for that 5% growth target, which is what the Politburo had vowed to do. But you have the likes of Goldman Sachs holding on to their growth forecast of 4.7%, saying that there is limited upside risk to that growth forecast. You have some like HSBC saying the tide has turned, but then some others saying this is not a whatever it takes moment. So is this the bazooka or not? I think it really depends on the implementation in the coming weeks and months, right? Because when it comes to boosting consumption, for instance, will that lead to a structural change in terms of people's income distribution, the confidence returning to the private sector, for instance, and even for the property sector? That readout made a nod to existing measures like removing home buying curbs, cutting mortgage rates. But will there be more? Will the government step in as a buyer of last resort? Will they widen the use of local government bonds to buy up those housing? I think these are questions that we still don't have the answers to, and it really depends on what follows through in the coming weeks and months.
All right, Min, great stuff. Wrapping that up for us. Min Lo, our China correspondent, on really what came out this week, and certainly is it going to be the game changer? That's the question you were asking. Winnie Wu, China equity strategist of BofA Securities, the perfect guest to really set and wrap up this week for us. Winnie, is this the kitchen sink moment from China?
I think on the financial monetary policy side, yes. On the fiscal and property side, we need to see. Right. I mean, yesterday Politburo meeting sent a very, encouraging message, but really, what are the numbers attached to that, right? What are the real policies? How quickly those are being implemented? And also, it's about whether the policies are matching up to expectations. Right? What we got in this market this week is partly because expectation was extremely low. Right? Position were low, valuation were low, and they came up with a big positive surprise. So sure, market responded. Right? Hedge fund moved fast, but as market rally, expectations are building up. We need to see expectation versus what they deliver. But I want to emphasize, even on the monetary policy side, it's very powerful. It's a very exceptional time where PBOC actually encourage the financial institution, including banks, to get exposure, get leverage in the equity market. It's very unusual, so do not fight against the central bank, at least for the short-term rally.
That's really what it seems to be the case. I mean, on the monetary side, it seems like people's expectations, to your point, have been exceeded here.
Yep.
The fiscal side is what's really lacking right now. So what more is needed, and what's going to be enough to sort of, again, maybe even exceed people's expectations once again?
Yeah. So if we think back in the economy, what's missing? We're missing risk appetite. We're missing jobs. We're missing optimism on income, on growth, on outlook, right? Because for the past few years, a lot of emphasis being placed on deleveraging, de-risking, anti-corruption, a lot of those are contractionary, and it was about more austerity. But with the economic weakness, we need more expansionary policy. We need risk on, not only for the stock market, but also for the real economy. So somebody need to go out there, start to take on leverage, borrow, invest, create jobs. And rate cut itself could not achieve that. I mean, we saw Japan, 20 years of zero rate, balance sheet recession. Right? When economy is bad enough, rate cut doesn't help create such a demand. But fiscal policy can potentially do, because if you think about the different entities in the economy, government, corporate, household, you can't bet on them to adding much leverage when income, job outlook is still not turned around yet. Enterprises, corporate sector, now private sector, usually the lagging indicators, right? They won't lead to invest in a downturn. SOEs traditionally did, but this time around, the SOE got too many KPIs, right? They are asked to do buybacks, value up. So can they really lever up a lot? Not sure. So that leaves us with government sector. Yes. Especially we need local government to step up.
You mentioned about confidence. This used to be a market that was anything but China. Now it seems like we flipped a switch. I'm going to buy everything in China.
Yeah, it's called all in, buy China.
All in, buy China. ABC now, no longer anything but. How quickly do you think, how sustainable is this sort of sentiment here? I mean, you've been talking to investors. Do they have much conviction now? Are they chasing this rally?
Well, it depends. Hedge fund certainly chasing, although hedge fund sentiment change by the hour, right? Depending on the news flow, depending on the market movement. I think for sustainability, a lot of people still have doubt. And the fact that market moves so quickly in 3 days, it's very hard for long only to chase. I mean, we've seen some behavior, but certainly not with much conviction. People are buying through like options, through the index futures. But for the rally to sustain, how sustainable? Well, I would say valuation perspective, right? MSCI China's valuation post yesterday's rally is still slightly below 10 times. The post reopening high in February 2023, it was 12 times. So there's 20% upside purely on valuation, and that's the first, checkpoint. But given this time, if we are really seeing a big policy bazooka, then we could potentially exceed the previous valuation cap, right? Because if you look at longer term, MSCI China was trading 16 times. So that's on valuation. But the other thing to watch, external factors, right? The geopolitical risk does not go away.
Yes.
And with the upcoming U.S. election in November, that's certainly some risk people need to watch. So I think for the next few weeks, China probably can still have more room to go, right? Valuation is not stretched, and there are more policy follow-throughs, hopefully, post the long holiday. But in a month's time, we probably need to reevaluate.
That's what I wonder, really. That sort of, you have that monetary policies coming through. They always operate with a lag. And then you have this sort of optimism now. How soon do you sort of run into the same problems once again?
Right. So the difference, one of the difference this time versus the previous round was previous round, for example, the May 17 policy package was focusing on property market. And turning around property market takes long time, right? Even turning around the economy probably takes several quarters. But this time, the new policies are focusing on stock market, like PBOC swap facility, the relending program. Those can come relatively soon, and those can show effect on the stock market relatively soon. So again, we need to differentiate the impact on financial market versus the impact on fundamental economy and corporate earnings.
We see Japan do something like this, right, where they bought up ETFs.
Yeah.
It didn't really do much for the economy in some ways. I mean, do you think that this swap facility has any sort of follow through?
So economy face a lot of problems, right? But stock market is not the answer.
Yeah.
But you got to start somewhere.
Yeah.
And at least create a positive wealth effect on some stock market retail investors, at least create some sort of risk appetite, create some sort of optimism. That's important, right? And that's the more kind of quick win that you can achieve. Because if you're betting on property market turnaround, you might really need to wait for a long time. So I would say, stock market, yeah, it's not a solution, but it's kind of a quick win. But importantly, you need to follow up with more real fiscal structural reforms.
All right, Winnie, stick with us. We're going to have more with Winnie Wu there, Chief Equity Strategist at BofA Securities. But still ahead as well, another big interview coming up with the Tokyo Electron CEO and its Asia expansion plans. And this, of course, as we know, the US is stepping up their pressure to curb its chip business, in China. We're counting down to the open of trade in Shanghai, Shenzhen, Hong Kong. If futures are telling us it's going to be another very positive day in the green. More ahead. This is The China Show.
October 1st. With the election weeks away, the VP candidates are set to face off. When we fight,
you guys are going to get me all fired up again.
Trust Bloomberg for news and analysis.
So is it style or substance, or maybe both? We'll be hearing from Tim Walz and J.D. Vance in prime time.
Yeah, and the question is whether the vice presidential nominees are actually able to move the needle.
Tune in for the CBS News Vice Presidential Debate simulcast with special coverage starting at 8 p.m. Eastern. Context changes everything.
Recapping the yuan fix that we got just as we went to ad break there. The yuan reference rate coming in at 7.0101 per dollar. The estimate had been for 7.0111. So the strongest one actually we've seen over the course of 2024. I mean, the offshore yuan were already below that 7 level so far. It has risen 3.6% since its July low against the US dollar. Again, it's that mixture. You've got the Fed easing cycle kicking off and China stepping up these efforts to support the economy, Yvonne.
Yeah, and you take a look at things like turnover, and, we were talking and tracking this, right? So over $100 billion in turnover. So it just goes to show how active things were. I think it was 1 trillion renminbi for 2 days, which is the first time we've seen since May there. So that usually is a pretty bullish signal as well. We mentioned about David Tepper. We got to talk about what Laura Wang from Morgan Stanley is saying as well. She, along with Winnie Wu, saying, we could see near-term upside, right? They're saying maybe about 10%, but really comes down to the speed, the pace, as well as the execution and scale of these policies in the next few months, right? To sustain this week's rally, they say they need to provide details on these swap facilities, a relending program by mid-October. The absence of any sort of swift follow-through within the next month could disappoint investors again.
Yeah, and to your point, really so much optimism and that big question around, like, how long does it stay in place, given we do have concerns there's not been enough on the fiscal front so far, and more question marks about the sustainability. But let's bring back Winnie Wu here, Chief Equity Strategist at Bank of America Securities. And Winnie, we want to talk about how you invest in this environment as well. What are the sorts of strategies that you're seeing right now or thinking about?
Depending on what type of investor you are, right? If you can move very fast, we say chase the beta, right? It's a cheap market, it's an under-owned market, large cap, liquid stocks, internet, financials, some of the consumers, some of the tech names. Chase the beta is the way to play the short-term rally if you can get in and out really fast. I mean, even some of the high beta property names, right? In the May rally, we got some small property names went up 3-4 times within less than a month, but then they gave up all the gains in the following 4 months. So, if you have the liquidity, if you have the risk appetite, if you can move very fast, chase beta. But for investors who want to be a bit more defensive, want to look at a buy and hold strategy, we still say high yield is probably a good place to be, because some of the PBOC's relending program, the focus on buyback, is still about total shareholder return, right? So, domestically, I'm sure some investors are saying, hey, you can actually do a arbitrage. Borrowing from PBOC relending facility at 2.25%, buy back your own high yield dividend stocks with 4 to 5% yield. why not, right? So high yield could still be a pretty good strategy. And as we discussed before, it's about the yield, but also certainty of the yield. But for a longer-term investor, I think market doesn't go up in straight lines. So some of these corrections in the coming weeks or months should be a buying opportunity. We really advise global long-only investors to spend more time looking at China, because even if this is not the real fundamental turnaround, it could may as well be a prelude to some real structural changes.
Hold that thought, Winnie. We have some more lines here from the PBOC. So they are cutting today that 14-day reverse repo rate from 1.85 to 1.65%. So there's a 20 basis point cut there. And we talked about this earlier that, they came in pretty quickly here after announcing all this monetary stimulus. Those RRR cuts and what we heard earlier this week are effective starting today as well. Winnie, you mentioned a little bit more about dancing to this music, right? It's interesting to chase those beta plays because you mentioned SOEs. That's always been that very defensive play people have been relying on. Are you saying now that this rally can actually spread quite more broadly here? Do I look more to cyclicals, for example, or is that still kind of a pain trade?
For the very short term, yes, we are seeing that already. Right? On Tuesday, my report still said chase beta, own the high yield, and avoid consumer property. But things change so fast, right? Post the Politburo meeting, and news about some local consumption coupons in Shanghai. The consumers and properties are moving very fast. So currently, if it's purely for short-term beta rally, I think the market breadth is improving.
Okay. Winnie, we'll have more from Winnie Wu there from BofA Securities, China equity strategist. Just want to mark New World Development just resuming trade today, of course, after what we heard from the news there that Adrian Cheng, the CEO, is stepping down after what we've been talking about, saddled with debt, the loss in the profit warnings that we've heard. There you go, upside of 16% for the developer here this morning. We're taking a look at the pre-market in Hong Kong as well. We talk about how we are continuing on to see those year-to-date highs when it comes to Hong Kong-related stocks here. It really has been a very big Hong Kong story this late. Pre-market they're up more than 2.5%, and yields continuing to tick higher in CGBs. Plenty more ahead. This is Bloomberg.
Taking a quick check on the pre-market, we are just 4 minutes away from the start of trading here for cash markets, mainland China and Hong Kong. And you can see here that positivity on the screen in front of you. Plenty of green following those big gains we had on the Golden Dragon Index overnight. Of course, Hong Kong, not just the story of all the China policy measures. Of course, that's the most part, but you can't discount that optimism we had in the US session overnight as well. The S&P 500, yet another record. New World Development, of course, one of the stocks we're going to be watching very closely here. We saw Adrian Cheng stepping down as CEO from the company. The question really over how much longer, though, does it take to fix the challenges facing this company, heavily laden by debt, restoring profit stability, something that could possibly take years. But that's the final picture there. More ahead with the opens. This is Bloomberg.
Welcome back. You're watching the China Show. The good times keep coming, it seems like, as we wrap up what has been a pretty historic week for markets in China. We're talking about the CSI 300, set to hit the best week in a decade. And really, you're starting to see it's the consumption plays, the laggards that are still winning here this morning, along with the property story. So, the mention of fiscal policy, though it lacked details, I think many say was quite crucial and was what needed to keep this rally going for another day.
Yeah, that's right. I mean, we've been discussing with Winnie Wu here that essentially that monetary policy side has maybe been answered to a degree for now, but it's the fiscal policy side that investors still want more answers on and more clarity around how they can try and boost consumption, which is really, as you say, one of the key sticking points for the Chinese economy. This is the start of trade, though, that we've got for the CSI 300, and what a bumper start to the day here. You've got the CSI 300 trading up 2% so far. Of course, think about the context of how we came into this trading session as well. The Golden Dragon Index, I mean, it was 11% up overnight. Yeah. Huge gains for Chinese stocks that are listed on Wall Street. Taking a look at some of those consumer plays in more detail here, you've got the likes of Mehta, for instance, trading nearly 4.5% to the upside. Medea there, another big gainer, 2% higher in the green today. Even you're seeing that turnaround for the commodities story. Copper, iron ore, both of those are gaining. That's the Shanghai contracts that you're seeing there. So again, just that level of optimism that we're seeing across the screen here, even if there's concerns that it might not last too long. Let's change on. Take a look at how Hong Kong's coming on, faring so far this morning. Again, that positivity just absolutely being echoed across. The Hang Seng, the MSCI China Index, Hang Seng Tech Index, all of these are trading at year-to-date highs. I mean, how many days do we see Hong Kong stocks? Every single square here is green today. There's that much positivity coming across markets. Likes of Alibaba, for instance. Meituan, look at that gain there, 7.7% upside that's coming across so far. Drill down, take a look at some of those movers in more detail. Of course, consumption stocks, as we were saying here. Fiscal policy support, could that be targeted at boosting consumption? That's certainly the hope of many. And as we said, Mehta there. But lots of these players here are moving to the upside here. We're seeing, for instance, dairy stocks. We had a push from the government to try and boost milk consumption. That's certainly coming across so far in the session. Property stocks, of course, we saw those efforts to try and stabilise the property sector, that route. Language very forceful coming through from that Politburo meeting. Again, you're seeing those big gains today for property stocks so far. And finally, just quick check. Different story that we're tracking, but New World Development, a very well-known property stock here in Hong Kong. We had the CEO, Adrian Cheng, stepping down. Very significant for people who aren't as familiar with how property companies are structured here, but they're largely family-owned. Adrian Cheng is someone who was really seen as that heir apparent, and as we know from the succession talks that really got underway last year, he hasn't been chosen as that successor, Yvonne.
Yes, but it seems to be a bit of relief from investors there, the fact that we have seen this sizable management change for the developer here. I'm taking a look at the industrial profit numbers crossing your Bloomberg. Yeah, it's a weak print from the prior, but yeah, no one cares right now. You take a look at that. We're rising 0.5% year to date on industrial profits. So quite a bit of a slowing from the 3.6% print that we saw previously here. But yeah, this is just dated at this point. You take a look at how dollar China is going. We're back below that 7 handle, so 699.31. Still a lot of questions how long the bulls can really run with this dollar China story here, where we continue to see. Is it mostly the dollar weakness story, or the fundamentals really changing in the economy that we can continue to see this renminbi strength here right now? CGB yields, we talked about 212 for your Chinese 10-year yield. We'll talk about the 30-year in the moment here. We actually saw that rising above, below, I should say, the JGB yield of the 30-year, which really just goes to show there is still that sense of Japanification that's going on in these Chinese bond markets as well. But yeah, CSI 300 having a great day today as well.
I think it's that big question, because you're seeing sort of a message that's being told in the bond space where investors are still concerned about, as you say, the Japanification of the economy, versus that optimism that's coming through in the equity space where everyone's just focusing in on the stimulus measures that have been announced. So let's get more on that. Bring back Winnie Wu, China equity strategist at Bank of America Securities. And Winnie, who should we be listening to here, bond investors or equity traders?
Well, one of the funny things I heard is Japanification might have been happening in China, but given the China speed, what took Japan 30 years to go through, it might only take China 3 years. And we're almost at the end of it. So more seriously, I think equity market and fundamental are deviating now, and it will probably continue to deviate. It might continue to deviate for some time. Fundamental turnaround in corporate earnings, property market, consumer confidence will take much longer, right? Probably several more quarters. But nonetheless, stock market is about earnings and multiple, and currently we are seeing the multiple re-rating. Partly because risk-free rate, U.S. rate, is going lower, right? And partly because the equity risk premium that people place on China, which previously involved a lot of concern on policy, that's also getting lower. So while earning recovery will take much longer to happen, we are enjoying the multiple re-rating on the equity market.
So you mentioned, so valuation alone, we see re-rating. When can we see earnings then
first half this year was still high base for first half next year. Right, so I would guess it'll probably take something like 9 to 12 months at least. And also, export manufacturing, which was a pretty strong pillar to the economy this year. Next year, we'll probably face more challenges, right? The potential tariffs, all kinds of sanctions, and the weaker external economy. So we need to be mindful of those risks and manage investors' expectation on the earnings side.
Just on that point of the export-driven economy, what's your sense around the U.S. election? How do you see trading activity possibly being influenced by that at all over the coming few weeks and, of course, post the vote?
I think if by November the risk of trade war tariffs is going to be much higher as a result of the election, if one side wins, which could lead to people's fear about this escalated trade war, the market will be risk off, right? To wade through what are the new policies coming out from U.S. on China in January, February next year.
You mentioned about, we talk about this milestone of the CSI 300, best week since 2014. It makes, you said this rally looks like what we saw 10 years ago, which was a very liquidity-driven sort of rally.
Yeah.
What are the similarities? What are the differences this time around?
In fact, in October last year, we had a report titled "The Darkness Before the Dawn," and that's compared China's market and economy now to exactly 10 years ago, right? We said basically, economy is trying to go through a critical rebalancing, and during the period, some of the old economic drivers are being faded out, but the new economic drivers are not there yet, and that's very frustrating for the market. Now, what happened 10 years ago? Fourth quarter 2014, we had two critical policies coming out. One was rate cut. 40 basis point cut to the benchmark lending rate at that time, but also announcement of local government debt swap. So that drove the initial leg of the rally. Following that, in first half 2015, it was leverage in the Asia market. On-balance sheet leverage, margin financing, shadow banking, OTC.
Yes.
Now, again, pure liquidity leverage-driven rally, unhealthy and sustainable, right? We don't really want that. But it nonetheless lasted 9 months, and CSI 300 more than doubled. So for many short-term investors, I want to remind people the upside risk in this rally, because potentially this is the first time in 10 years pretty much, right, that the financial regulators encouraging banks to get exposure, increase leverage in the stock market.
Yes.
So even without fundamental, a leverage-driven rally could be very powerful.
Pushing the banks, though, I also wonder on the effectiveness of policy. I mean, they've obviously pushed through this triple R cut to decrease the amount or freeing up cash for banks. You've also got this story that Bloomberg had yesterday weighing a capital injection. Credit demand, though, has just been so weak from households and from corporates. So how does that stack up against what the PBOC is obviously trying to do? So now, first, the positive thing is they are giving out a lot of visionary plans on everything. Triple R, LPR, mortgage, bank recapitalization, stock market. Some of them will be more effective in the short term. Some of them might be of lower priority or urgency, right? Like you said, bank recapitalization, in my perspective, is probably not really urgent or not of higher priority. If they got 1 trillion, the 1 trillion should be better used in terms of driving demand, right? Whether it's be given to household or be used for property destocking. Without credit demand, recapitalized banks, the risk is banks got stuck with excess capital and lazy balance sheet.
Winnie, it was great to have you here for the first 40 minutes of the show here. Winnie, China equity strategist at BofA Securities. Of course, hope you still get a holiday for Golden Week as well. It's been a busy one for everyone. All right. You take a look at how HSI is doing, and we continue to see some gains here in terms of all sectors, except for, take a look at the bottom of the bunch here, which is telcos and energy, that are actually not taking part in this rally here today. But there you go. Top of the board, it is the consumption plays. Consumer staples are catching a massive, massive bid, as well as discretionary here this morning.
And coming up, more on the bond market, what we're seeing in China's debt space with the co-head of regional fixed income at Maybank Asset Management. We'll have more on that ahead. This is Bloomberg.
All right, you're starting to see a continuation of this melt up in CGB yields here this morning. There you go. The 2-year is at up about 5 basis points, 212 for your Chinese 10-year yield. But yes, it goes to show that maybe we can continue to see this sort of rotation out of bonds, given just so much momentum from the equity markets. But you still have a lot of analysts this week sort of scratching their heads, right? If we're talking about massive monetary policy, doesn't that mean yields should actually take a bit lower here from now on? I think Stan Charles Becky did say there still is that chance for that 10-year to break below 2%.
Yeah, and I mean, it's getting, as you say, those comparisons. What's happening in China? How does that compare to what we saw in Japan? And that sort of balance sheet recession, the fears that have been around that really for months in China, certainly perhaps haven't really been assuaged yet either, those fears around it. ING, for instance, they're saying that China's latest bunch of stimulus measures is not going to be enough to, as you say, to deter the demand for bonds, and they're still seeing that money flowing back into them instead.
Yeah, so this is still something to watch, right? Despite yields are picking up, the long end of the curve in China, you're still seeing this insatiable demand for bonds on the long end of the curve. You take a look at how the rest of this equity market is going. Certainly, that has a lot to do with the dynamics moving forward here. Rachana Mehta, she joins us now to talk us through what everyone is trying to talk about, the stimulus here. Is this really the game changer, the whatever it takes moment? Rachana Mehta, she's the co-head of regional fixed income at Maybank Asset Management. Rachana, obviously it's been a huge week. I'm just wondering, what stood out to you as one of the biggest takeaways from the stimulus blitz we got from China?
I think for me, the biggest takeaway was actually giving like 800 RMB per month to all the low and middle income families. So actually helping the families, giving out the cash handing, I think is one of the biggest things. Of course, recapitalization of the bank is the second big thing, because for me that is very important, because banks were not lending because of the capital ratios. So those two are the most important factor. And actually the third most important is the property sector. I think this is the first time they mentioned that they're not going to release a lot of commercial land. So I think still we are looking for the final package, but I think overall stabilizing the property sector, capitalizing the banks, and actually giving out cash handouts, to build actually the consumption is very, very poor, correct, in China. So finally, I do believe with all these factors, from a medium-term perspective, China will move away from a manufacturing economy to a consumption-based economy. So I think the consumption is the key where they are really helping out low and middle-income families.
Those measures to try and benefit consumption, how does that then factor into your outlook toward the Chinese economy, and are you changing your strategy around Chinese credit and the offshore yuan as a result?
Yeah, absolutely. Over the last 9 months, I've been very skeptical of Chinese economy, but finally, I think with fiscal policy, monetary easing, and actually China doing the right thing from a medium-term perspective, I do believe that I continue to like the renminbi, and I also like some of the Chinese Asian credits, which have been actually not doing pretty well because there was not enough supply. So I feel those Chinese credits should continue to do well over the medium term. Of course, we also have geopolitics. We have U.S. elections, So all that bearing in mind, short term, you may see some volatility, but medium term, if China really follows its plan to build up consumption, to actually increase youth employment, correct? I think those are some of the key factors for me from a medium-term perspective to be bullish in China. But short-term, we have seen a rally. You may see some volatility because especially before U.S. elections, people will be defensive, and we know that there'll be tariff hikes and all depending on who comes to power. So eventually those economies will be impacted. But I think from a medium-term perspective, China continues to actually increase consumption by helping the low and middle income families. It's basically giving away, correct? It's giving out, which for me is very, very positive from a medium term perspective. If they continue to follow fiscal and monetary easing.
Rachana, is it enough, though, to at least put a stop to some of these structural issues, right? The deflationary spiral that we're seeing, this property downturn that's been going on for 6 years now. I mean, do you think that these fiscal measures will be enough to at least change that? Or what we're seeing right now is purely a tactical sort of rebound?
Definitely, it's a tactical rebound. And as I said, geopolitics will also play a part. But I feel that it takes a time for an economy to actually go through all these structural problems. So I think if the first time China is realizing the consumption is the key and helping low and middle income families to build up and the youth employment, I think are the key for me from a medium term perspective. So yes, as of now, I feel they are doing the right thing, but they have to continue to do this over the next 2 to 3 years. So I feel if they continue to do what they're doing it now, it should be positive in medium term.
Okay.
Rachana, we were just talking earlier about the yield on China's 30-year government bonds, and it's still looking to test the equivalent or its equivalent over in Japan. Again, it seems like there's still that pessimism around the longer-term outlook for China's economy. Do you see that sort of being sustained? What's your view on what we're seeing here?
Actually, I feel that with fiscal pump priming, you're expecting the curve to steepen across the board, correct? So I don't expect China to go Japan way, because Japan is deflated for so many years. So I think for China, it's all building up confidence and sentiment. And I think it may take some time because we had the Xi Jinping government, and actually there was a lot of. So he was going, basically he was focusing the economy, but I think it will take some time. So from a medium-term perspective, I think if China does the right thing, especially what they came out with this package, if they continue to do that, I think it should be okay. I don't think so China going to Japan way over a medium-term perspective.
So do you see more upside when it comes to CGB yields in the next few weeks or months, Rachana?
Yeah, so I think in my previous interviews, I've said that I think it's very difficult for it to break 2%. So for me, I think 2.4% kind of 10-year yield should be in that range going forward. I don't see actually dropping below 2% for Chinese government 10-year bond yields.
How is that optimism around China's economy, or what you're seeing, sort of feeding into your assumptions that you're making around other Asian government bonds then?
Yes, definitely. In fact, I've been very bullish on Southeast Asian currencies, so I continue like Indonesian government bonds and even Singapore government bonds, because Singapore government's 30-year bond used to be about 3.3%, and Singapore being a fiscal surplus country, I do believe the 30-year Singapore government bond still offers value. Yesterday we had a 50-year auction at 2.62, so I believe that the 30-year can go back to 2.3, 2.2. So I think there's still upside on Singapore government bonds, and I continue like a currency appreciation also, because you can get a currency alpha, whether it's Indonesia, whether it's Philippine peso, because Philippines also got RRR. So I think Fed rate cuts actually really helps Asia and emerging market. So it's the first time we may see a lot of flows coming back into Asia, both equities and bond market, especially with currency appreciation.
Yeah, I mean, the Fed certainly is a big factor in why we're seeing maybe this China stimulus as well. I'm just wondering, what assumptions are you making of the Fed now that, after this sort of big move at the start of this easing cycle, should we still rule out the possibility of another 50 basis point cut, I should say, or are we likely to see more aggressive sort of easing moving forward?
Actually, I was not proponent of more easing, because if you look at the U.S. economy, it's still holding okay. Yes, labor market is finally slowing down. But I'm thinking of, like in November, I'm expecting a 25 basis point cut and maybe another 25 in December. But initially, my call was only about 75 basis points. So I think market is thinking about 100 basis points. So there's a chance that they may do 100. But I'm not expecting a 50 basis point cut in November, unless the data really starts surprising on the downside, especially the labor market data over the next 2 months. But my call is about 25 basis point in November and 25 basis point in December. But I think overall, still, as the rate cuts happen, the interest rate differential starts narrowing down, correct? So that is the biggest thing for Asia going forward over the next 2 years.
Rachana, it's great to have you. Rachana Mehta there, co-head of regional fixed income at Maybank Asset Management. We got plenty more ahead. This is Bloomberg. Well, we continue to watch for more commentary when it comes to what we got from China policymakers here this week as well. And the economists seem, at least upbeat of what this does to sentiment? The longer-term question is, are we actually seeing some meaningful structural change? That certainly leaves a lot of questions here, right? I think HSBC's Jing Liu, she was here earlier this week, and she talked about, look, things are looking better. The tide has turned, and they're still expecting more proactive initiatives. Are we going to see more positive surprises is one thing. Becky Liu from Standard Chartered also was here this week, and the fact that she said they mentioned even about fiscal policy, the fact that they're talking about spending more, special bond issuance, the like here. We didn't get the details, but that may mean that they actually may have to raise that budget deficit before year end as well. Some other commentary there. What stood out to you, Belle?
Well, actually, what stood out to me is that view from Morgan Stanley, because I think amongst all the optimism, saying it's not a whatever it takes moment is kind of interesting, but it does sort of point to that big question mark, really, what's hanging over all of this. The monetary policy side, yes, as Winnie was saying before, this is really unprecedented and very impressive coming through, but still it's that question mark and need for clarity around when they say fiscal stimulus measures. What do they actually mean? What sort of support is going to be provided to the economy? But certainly that's what traders seem to be going off today, this hope that we will still see more steps to come upon.
Yeah, so the fiscal policy side of things is vague, but the fact that they said stop the decline on property, that's an explicit target. And what came out of this Politburo meeting was quite short, right? I think it was like 1,200 words. Usually they're about double, about 2,500. Jing Liu basically says, yeah, short and concise and forceful. Daring, as some say as well. There you go. Markets continue on for another day here as well. CSI 300, Hang Seng, MSCI China all up some 2%. Volatility is slightly higher here this morning, and we are seeing commodities like iron ore flying some 3.5% once again. We'll have a lot more on the way. You're watching The China Show. There's a saying that's going around in social media circles in China now. It used to be ABC, anything but China. Now we're talking about all in, by China. We're certainly seeing that this week as we talk about how we close, and we're getting close to that best week since 2008 for the CSI 300. We're talking also what it comes down to. So now not just 10-year highs, we're talking about 16-year highs for that benchmark as well. And, just the coordinated policy response that we got from the PBOC as well as that Politburo meeting. I think you add that, it's what people say, it's a cocktail of stimulus that is really giving us a lot of thought about whether this is a regime change that we're seeing.
Yeah, you think about it. You bring the PBOC together with the financial, with the stock market regulator, securities regulator. You add in a Politburo meeting on top of it. I mean, it's certainly a melting pot of a lot of different stimulus measures that have come through for investors. I mean, there's really seems to be something in it for lots of different corners of the market over the course of this week. And we have seen that really significant rebound off the back. Yes, there are question marks over the sustainability of it, policy transmission lags, lack of clarity around fiscal measures announced so far, or those hints that we could see more fiscal support on the way. But certainly, even if bond investors are still concerned about the direction and health of the Chinese economy, stock investors are really cheering what's been heard so far. You've got the likes of Quaker Motai, for instance, trading up 4.4%. Dairy stocks as well, that explicit support we saw coming through for dairy consumption. Lots of different rallies across the board. Lots of different sectors in the market are benefiting from this. That's the state of play for some of those major consumer stocks there. But let's take a look at how China has been outperforming global stocks as well. You're looking at MSCI China here outpacing the gains that we're seeing for global stocks by the most since 2022. It's interesting as well because it's not like global stocks have been underperforming.
No.
We saw the S&P 500 having one of its best days or notching a new record overnight. So there's certainly just a lot of optimism, and I guess to an extent sparked off by the Fed rate cut and that easing that also plays into the stimulus measures we see from China. But that's that chart there. Let's take a look at how Asia ex-China is also performing in the session today. It's not that same jump that you're seeing, the Nikkei, for instance, the Kospi. Aussie stocks, they're largely sitting flat so far, but broadly we do see the index here gaining today against, again, that very positive backdrop, Yvonne.
Yeah, I think Winnie Wu from BofA was basically saying, based on valuation alone, this market in China can actually rally some 20%. So you might be seeing that re-rating when it comes to valuations. Earnings, she says, it takes some time for earnings, those downgrades, to really bottom out. She says maybe a few more months or so. Laura Wang from Morgan Stanley had a similar view, right? If we don't see this kind of swift follow through on these pledges, markets could be disappointed again. We saw that certainly leading up to many sort of big holidays like the one that we're about to get to into Golden Week. And we come back on most occasions with disappointment, where things start to peter out from here as well. But still, Morgan Stanley thinks 10% upside near term could still be the base case here right now. Let's bring in our senior reporter for equities, Abhishek Vishnoi. Abhishek, you've been with us, holding our hand through this whole journey and roller coaster this week. Just walk us through the week that we had, and what consequences do you see for China and more widely for the world now?
Well, I think it's been a great week in a lot of years for China equities, and not just China equities, anything related to China equities. So includes EMs, includes Asia, includes commodities. Now, what we are getting, that this is possibly the start of the end of China shunning trade that, started, with the anti-IPO's cancellation. So that's a big deal. This means tide has turned. This means a lot of expectations of investors have been met. We have seen rate cuts, a barrage of stimulus coming in from central bank, and now, Politburo is wanting to keep supporting the economy, sufficient fiscal spending. More measures are on the anvil. That's the expectation. Now, sell side is talking about 10%, 20% upside. But, this is the time when, you don't have to debate whether it's tactical, whether it's technical, whether it's structural. If you're not positioned, you're actually going to miss out on this rally. This rally looks to have legs. As you rightly pointed out, a lot of bellwethers have started rising. There is no other major market which is trading at 9 times. And everything that investors have asked for has been met. Now, the only thing that we need to watch is follow through. Details, planning, actions, how that suffices, how that happens. I think we might, and because all these measures have been announced just ahead of a long holiday, I think it might also, benefit that we see the impact of these, how, the locals talk about it, how they start spending after the holiday, and let's see what they do on property side. But the tide has turned. The market's looking way more attractive. This is really the end of China shunning trade.
Abhishek, what tells you that this is different from the other times this year where we've seen optimism and investors have been caught wrong-footed? Is it that coordinated policy response? Is it the breadth and the depth of the measures? What kind of upside are you seeing?
Yeah, that's right. I mean, it's coordinated, it's rare, it's out of turn. You have never seen something like this being vowed in a Politburo meeting. You've not seen central bank coming out, and initiating something like a central bank put. Now, I don't know if it's structural. I mean, what our reporting is showing definitely is that it's way more than tactical bounce. EPS can take a bit of time to come in as these stimulus measures trickle in. But PE would get re-rated. You won't see MSCI China trading at 9x. That's what strategists are telling us. When a wall of money is chasing and when a volley of measures are coming, it's actually just really futile to argue what is the duration of this bounce. There are many out there who are still comparing, China to the Japanification of China economy, etc. But look, we are all humans. Cycles get shorter. We have seen Japan lost decades, but that will not be the case for China. Everybody knows the lessons that, the world has learned from Japan during those periods. So it now becomes kind of a look back, like what happened? Okay, so we are here now. And it's also because Japan is coming out of its own problems of deflation. It's not just because China was going there. So I think, it looks very much to a lot of strategists and a lot of investors that incrementally China may start commanding a bit more respect in portfolios. Incrementally, many global managers, especially not the Western world, but at least on Asia side, would start seeing this as a market which can provide diversification at a time when India is trading at, let's say, 22x, Max 7 is trading at whatever valuation they're trading at. So, and if you look at the recent data, you go into Bank of America's fund manager survey, you go into any survey, actually Asian fund managers, even before these measures, had actually turned a bit overweight on China stocks. So, the confidence has started coming in, and that's what was missing. Markets are made by investors. Investors make prices, and the price is telling you that this is very different from what we have witnessed during the reopening, what we had witnessed during Feb. So hopefully, it will have more legs.
All right, that was our senior reporter for equities, Abhishek Vishnoi there. Let's get more on China's barrage of stimulus measures, bring in our Bloomberg economist, Eric Ju. And it's clear there's a lot of optimism around China's measures that have been announced this week. We just heard there from Abhishek talking about how the economy can avoid that Japanification, that balance sheet recession. It's incredible when you stack it up against what we had just a few weeks ago and what we've been hearing. Everyone was talking about this being the garbage time of China's economy. It's just been so fast, that shift to optimism. Are we right to keep that level of optimism, rather?
Yeah, I think everyone is surprised, right? It's so crazy weak, and you can see how quickly sentiment can turn. And it may took decades for Nikkei to come back. It took only 3 days for CSI to come back, right? So I think a key difference probably between Japan is you see how policy changes, policy shifts can make such a huge difference in China, because either except for even if including monetary policy, fiscal policy, China still has lots of other policy regulations they can maneuver to easily change the market sentiment. I think that's a key difference. But for economists, I think the initial rally is more on the expectation. But for us, we want to see more evidence, how they can turn the economy, right? But that won't be so soon, because we have seen some rally before, like China reopened from COVID a couple of years ago, right? But that the rally is, I think, at least comparable to this time. The optimism is very strong, but after probably a couple of weeks, months, then the market realized that the activity, the recovery was not so good, right? So the rally will just, fade anyway. So I think this time we do need to see, more policy follow through after Politburo, right? So especially on the fiscal spending, especially on how they are really going to fix the housing market. Right. So far, we see the demand side, stimulus loosening. It's not really working to stabilize the property market. So they have to find some innovative way, some new method trying to fix the housing market. So until we can see, those turning around signs, I think that the market will be, more, optimistic that this time is a real, turning point for China.
Yeah. What are you expecting in terms of the fiscal policy side? I mean, the fact that they mentioned we want to stop the decline on property, but they kind of failed to talk about numbers, right? Of what does this all mean? Should we assume that this budget deficit could actually widen by year end?
I think it's probably too late to widen the budget deficit, but they can still, like we had the news yesterday that they are going to issue more special government, right? I think that's a more plausible way to can expand the fiscal spending. And I think also we noted yesterday that they have some cash to the very poor group. Although that's a very tiny group, it's not really to move the dial. But I think that's workable direction, right? They can expand the program, giving more cash subsidy to the low-income group, just using the new fiscal the special bonds, such things to expand fiscal spending. I think that's also a boost to consumption, and the really very weak consumption, that's the key, dragging the deflation right now.
That sort of consumption voucher, though, is something that would fall into the welfarism basket that President Xi had always sought to avoid. I wonder what you make of the policy measures that have been announced and whether you think any of them are doing something to try and fix the structural problems in the economy or whether they end up enhancing them.
Yeah, I think it's complicated because it's trying to not face both in cyclical, structural, but sometimes the targets are contradicting with each other, right? So you cannot probably fixing them at the same time. I think, but the message from yesterday is, I think, at least they want to focus more on cyclical in the near term, right? Let's try to boost growth for now. And for structural things, I think they already had a blueprint in the July's plenum. So I think like the delay of retirement age, that's part of those structural thing, structural fix. So I think they will do that, probably later or in a gradual way. But I think at least for now, the priority is they want to fix the near-term growth problem. Right.
Eric, thank you. Our Bloomberg economist, Eric Ju, there on what has been, he said, a day to remember on Monday when it comes to monetary policy, but what a week for all of us as well. We're going to dwell more on the Chinese economy and the property sector next, get you more of a market check here where we continue to see, in just the last 5 days, developers have been up some more than 30% on these pledges to stop the decline in the real estate market. This is Bloomberg. All right, we talked about property stocks, and yeah, there you go. We're seeing another day of really gains here, and it seems like, as Winnie Wu had mentioned from BofA, it's the beta plays, right? You can even chase consumer, you can even chase property, just given the news that we got this week for a short-term sort of horizon here for investors. So you see China overseas land up some 4%. It seems like China's also up some 7% here today. But yeah, all in all, this week we've seen 30% gains on the Bloomberg Intelligence Developers Index as well. Let's get more from the BI take as well. Expecting Tier 1 cities in China to step up their support following these Politburo pledges. Let's bring in our real estate analyst, Christy Hung. So there's a definite shift in tone on property, what we saw yesterday in this readout. What difference do you think it's going to make this time around?
Yeah, so in the Politburo comments, you saw plans on forceful rate cuts and also, determination to stop the housing slump in China. And I think, you can already sense authorities, they're getting more desperate. And, while there's greater determination to support the property sector in China, don't forget we are more than 3 years into a crisis. I think, in a way, the damage to confidence is already done. And, there are also, deep-seated structural challenges for the sector. So I think, we are still, lacking ammunition to address the many issues for China's housing woes. So I think coming up from here, there's no quick fix to the problem. We need consistent follow-through on policy to address issues like re-anchoring households' expectation on home prices, easing the housing glut in China, and fixing the issues of unfinished homes. All these would, take months, if not years, to address. So, it's a step in the right direction, but I think it's not something that can be fixed overnight.
Home sales were not great in September, and we're heading into the peak buying season in October. So what sort of measures do you think we should expect further on the policy front in the coming weeks?
Yes, so I think in the coming days and weeks, expect a fresh wave of policy support from Chinese cities. I think this is also very timely in the sense that it should prepare the market for the Golden Week, and as well as, the rest of October. September, October used to be the peak season for Chinese home sales. And if you look at preliminary data for September, first half of September, home sales are down about 30% year over year. That's not good news. So I think that also explains the timing of all these stimulus push and measures, and hopefully the government's shift in tones in the policy support could help really put a floor to home sales.
All right, Christy there from our Bloomberg Intelligence team, Christy Hung. Let's check on as well shares of New World Development, because we have seen a very big bounce so far in the session for that stock, rising as much as 16%, even gaining further to 20% here. That's after Adrian Cheng resigned following the company's first annual loss in 2 decades. For more on what this means, let's bring in Patrick Wong. He's APAC Real Estate Senior Analyst and Head of Bloomberg Intelligence for Hong Kong. Patrick, I mean, this is a company that's facing some very significant structural issues. How much is Adrian Cheng stepping down really going to change the trajectory and the outlook for the company from here?
I think that is really interesting one, because the family-owned kind of, right, that is the management is there, and then now change with the kind of a new structure that bringing in some hope, right? Especially, I think the asset disposal is very important for New World. The challenge we see is the leverage ratio is so high, right? Our calculation is 92% of the net debt to shareholder equity ratio. So that keep increasing. At some point, I think the disposal is very important. And now the parent support is also very important. We see the Kai Tak Sports Park that they announced yesterday potentially could be a deal that selling back to the parents. So it is also a positive thing for New World if that deal really happen to lower the leverage and also increase the liquidity.
Yeah, maybe walk us through a little bit more about that leverage ratio. In these earnings, you said it continued to increase if you compare it to their peers out there. What are going to be the key issues?
I think the challenge for New World is that over the past decade, you see they acquire more and more projects. Some of that we see is doing really well, right? Looks like K11 Museum in Tsim Sha Tsui, I think looks really big project, which is great. And then we have like K11 Skies upcoming at the airport, it's still ongoing. But there's lots of massive projects and lots of projects in mainland China, also getting quite a bit of CapEx investment. So it takes some time to New World to get back the return. And when the interest rate is at low level, it's okay. But when interest rate is going high and high over the past 2 years, they face the challenge.
Yeah, we saw those bets result in a 20 billion Hong Kong dollar loss in the latest results. I wonder, given as well we're approaching or we've just kicked off that Fed easing cycle, does that impact the business outlook, and can it maybe help a sort of faster turnaround into next year?
That's true, because the interest rate, I think the recent cut from the prime lending rate in Hong Kong, and then Fed fund rate potentially is more cut happening for Q and next year. That's also a good thing for Hong Kong, because we see the commercial market is very tough. The sales volume is declining. So basically, I think with that, the developers could also sell some of the long-core assets or even some prime assets if they want to, right, to ease that problem. And also, I think for the New World Development, they also have some of the new projects that in mainland China with the stimulus happening. So hopefully they can also sell some of them, especially the Greater Bay Area, which is relatively could be better than other regions. So hopefully it's also something that for New World to turn around next year.
Yeah, seems to be like a new world for New World. I had to say it, right? So rare to see someone that's not from the family actually take over as well with Ma Siu-Chen. We'll see how he takes this developer. Patrick Wong, APAC Real Estate Senior Analyst and Head of Bloomberg Intelligence here in Hong Kong. You can get an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition newsletter. It's out every Thursday. You can sign up through the website, bloomberg.com/newsletters. This is Bloomberg.
All right, luxury stocks have been on an absolute tear, not just here in Asia. We saw it coming through in the European names, for instance, overnight. But it's that story around China's stimulus and the measures that could be there to try and boost consumption. So, for instance, you've got Prada up nearly 5%, Samsonite, the luggage maker, 8% in the green. Even Chow Tai Fook gaining nearly 1% here. So, again, it's that story. Big China stimulus, it's really being targeted. Perhaps the fiscal side as well could end up trying to boost consumption in the mainland economy.
As you mentioned, right, this is something that has global implications, and especially when it comes to Europe and the exposure that some of these names do have to China. And you look at Bernard Arnault, for example, he certainly is, I think, smiling after what we've been seeing this week as well. This is, of course, the LVMH head. And in terms of how much wealth was really accumulated these last few days, we were talking about $17 billion of his net worth that soared on Thursday. So now he's worth $201 billion. That basically makes him the fourth richest man out there here right now. We saw shares of LVMH basically jumping close to 10% on those stimulus bets.
Yeah, I mean, as we've been pointing out, he entered Thursday having lost more wealth this year than any other billionaire.
Oh, yeah.
More wealth this year than any other billionaire. And then he got that surge or that green light to supercharge stimulus in China, and off the back of that he just zoomed up the rich rankings once again, and he's back in fourth position here. So still down $7 billion on the year, but a lot better, I guess, if you're counting in the billions than a $24 billion loss.
Yeah, and I think for the greater implication is, what does this mean for the consumption story, right? And I think for traders, at least for the last few days, it really means it's a green light to buy consumption once again, whether it is discretionary, whether it is consumer staples. You're seeing that continue to rise for another day. Look at travel, look at dairy, look at beer stocks, for example. This is where you're seeing most of that movement and momentum in this market now. China Mungnyo Dairy, there you go. We're up some 11%, and we're now talking about this Hang Seng set for the best week since 1998 as we count down to this Golden Week holiday in China. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in a moment, and really we're not seeing a whole lot of activity here this morning on the Nikkei 225. The Topix is actually lower by about 0.8%, so really not kind of joining in on this China rally here today. Dollar yen's on a bit of the weaker footing. That's not really helping stocks here this morning, but we're back to 145 levels for dollar yen. Of course, it might be because we're counting down to this the LDP election or leadership poll that's happening later on today, and it might be one of the hardest to call in decades, just given there's a record 9 candidates that are vying for that prime minister job as well. So certainly this one to watch later on this morning.
All right, moving to the U.S. election now, and the latest Bloomberg News and Morning Consult poll suggests Democratic presidential nominee Kamala Harris is widening her gap over Donald Trump in 7 key swing states. Bloomberg's Bill Ferries has been tracking this, and Bill, there were really 2 key issues that Kamala Harris needed to nail the messaging on: the economy and immigration. How has she been faring on both of those fronts?
Right. As soon as she took over as the leading candidate for the Democrats, those were highlighted as the 2 biggest weaknesses she had relative to Donald Trump. What the latest Bloomberg Morning Consult poll shows is that she has effectively been chipping away at Donald Trump's lead when it comes to voters' confidence about who would handle the economy better. Donald Trump had a wide margin over Joe Biden when he was still in the race, and even just a couple weeks ago, it was 6 points over Kamala Harris in that. She seems to have chipped it away to 4%. But then in some specific areas, when you ask people detailed questions about the economy, she comes out ahead. So if you talk to people about who would better handle the stock market, Donald Trump wins on that front. If you talk to them about who will help deal with issues of personal debt, credit card debt, those kind of things, Kamala Harris comes out on top there. So she's chipping away at this. And more broadly, what you see through this poll over the weeks is that she seems to be building a very small but continuing lead over Trump, still within the margin of error, which shows that this is a very tight race.
Yeah, I mean, we're pretty much down to the wire, right, before November now. Bill, I'm just wondering, is there anything that the Trump campaign can do to narrow that sort of lead, that slight lead that Harris has? What does his campaign need to really work on now in the next few weeks?
Well, as Annabelle mentioned, the other big weakness that Kamala Harris had getting into the race was immigration. That continues to be a strong point for Donald Trump. He has, according to this latest poll, about a 14-point lead among likely voters when it comes to who would handle immigration issues more effectively. We've seen him continue to hammer in on that point. But one thing he really needs to do if these numbers hold for Harris is Donald Trump needs to bring those voters who are really on the periphery, who are really not sure whether they're going to vote or not. He needs to bring more of those people into the election. He needs them to vote for him to help get over that hump. It's very tight. A lot of people's views are locked, but a lot can happen in the final month. Go back to 2016. The FBI reopened their probe into Hillary Clinton, and you had the Entertainment Tonight's a video or audio of Donald Trump criticizing women come out. That was all in the last 4 weeks of the campaign. So there's plenty of development still ahead of us potentially.
Bill, this is an election that people are talking about could end up being decided by something like 50,000 voters. It really is going to end up being possibly very, very close. What are the key groups that each one needs to target between now and the voting day? Hispanics, for instance, has been one that's been highlighted.
Yeah, women. It's college-educated women for Kamala Harris. They swing very broadly in her direction. Donald Trump is probably trying to target more working-class white men in places like Pennsylvania, Ohio, Arizona, but Hispanic men as well who have been cutting a little bit more for Trump relative to history in previous presidential elections. Kamala Harris is going to be trying to do more outreach there and win over a little bit more support. But you're right, it could very well be a matter of tens of thousands of votes in these 6-7 key battleground states. Right now, this poll shows that things are somewhat going more in Kamala Harris's direction, but it's so tight that any development between now and 5 weeks from now when the election takes place could easily swing it to one candidate or the other.
Bill, thank you. Bill Ferry's there joining us out of Singapore with the latest on these polls. We're going to leave you with live pictures out of Florida where Hurricane Helen is set to make landfall there. There you go. You take a look at these pretty graphic photos that we're seeing from Taylor County in Florida here right now. We got plenty more ahead. This is Bloomberg.
Japan's ruling LDP votes for a new leader in a few hours, with the winner set to become the nation's next prime minister. Our colleague Sherry Ahn explains why this has become one of the most open races in the Conservative Party's history.
It's a crowded field of contenders vying for a job that comes with unprecedented challenges. The large field of candidates in Japan's ruling party election makes it likely that no one will secure a majority, which would trigger another round between the top two contenders. Among those on watch for a potential runoff, Shinjiro Koizumi, the son of a former prime minister who at 43 could become Japan's youngest prime minister. Shigeru Ishiba, a former defense minister who's running for the 5th time, and Sanae Takaichi, a hardline conservative who would be Japan's first female prime minister if she wins her party's backing. She's also one of the most outspoken on the Bank of Japan's policy path as an advocate of monetary easing.
She has basically said that the BOJ is making a mistake by moving as quickly as it is to raise interest rates. And frankly, I think that sets the Takaichi government up for possible conflict because she really wants easy money to continue.
Japan's next leader will need to grapple with geopolitical challenges as well, as the country gets pulled deeper into tensions between the U.S. and China. Tokyo faces threats of retaliation from Beijing amid pressure from Washington to tighten restrictions on sales of advanced chip technology. Adding to the uncertainty is the tight U.S. presidential race, though both candidates for the White House have opposed Nippon Steel's $14 billion takeover bid for U.S. Steel.
U.S. Steel should remain American-owned and American-operated.
U.S. Steel is now being sold to Japan. I will stop it. We got to do fast. We got to work fast, but we're not going to let it happen.
Some common ground for most of the candidates is the revival of Japan's nuclear power industry. 13 years after the Fukushima disaster, this is seen as a way to improve energy independence and reduce carbon emissions. Whoever wins Friday's vote is expected to call a national election soon, seeking to shore up support from a Japanese public weary of scandal and demanding sustainable economic growth.
Sherian, Bloomberg, Tokyo.
And we will continue our coverage of the LDP election with voting due to begin around 1 p.m. Tokyo time. The winner should be announced at around 3:30. That's before a news conference around 6 p.m. in the Japanese capital. Let's bring in now Tina Burrett, Assistant Professor of Political Science at Sophia University in Tokyo. Tina, it's great to have you. We've come down to the wire here right now. It seems like there's no clear-cut sort of winner. What do you think is going to be the likely outcome today?
Well, as you say, it's quite close and very difficult to call. I mean, I think the top three candidates would be Mr. Ishiba, Mr. Koizumi, and Ms. Takaichi. They all offer somewhat different policies, but also they offer a very different vibe, a very different face to the party. As your package said, Mr. Ishiba is on his fifth attempt to become prime minister. Mr. Koizumi is only in his 40s, and Ms. Takaichi would be the first female prime minister. So that, I think, creates a certain level of interest in the election. But in terms of policy, they do have their differences, but they're all conservatives. And I think Japan perhaps is more looking forward to the general election when it might get some real choice.
There's always, of course, a new leader bringing in sort of new policy imperatives and a different focus, perhaps. But where do you sort of see the biggest changes coming through, possibly on the economic front or in terms of structural issues that are facing the economy? There's geopolitical concerns. What are you most concerned by or looking at most closely?
Yeah, I mean, I think the Japanese public are most concerned about the economy. And actually, although all the candidates have addressed the economy, they've been quite light on specifics, which I think is somewhat troubling to Japanese citizens who have been struggling with high levels of inflation, especially in their grocery baskets, for several years now. So that, I think, is the most important focus for Japanese voters. It's the bread and butter issues of wages, of costs, generally of the economy. I think two of the top candidates, Mr. Ishiba and Mr. Koizumi, would probably continue with quite similar policies to current Prime Minister Kishida, especially as far as recognizing and respecting the Bank of Japan's independence and following their policy to probably raise interest rates again soon. Ms. Takaichi is more in favor of continuing to have fiscal stimulus, sort of pumping money into the economy. I think she believes that it continues to need to be inflated. However, I think there's beginning to become real frustration in Japan with the current level of inflation. So I think that might, if she were to become prime minister, lead her into some difficulties were it to come to a general election.
And Tina, it's interesting, right? This election's a bit different because past votes really were determined by all these powerful factions that were within the LDP party. Now that several have basically been dissolved, how does that all play out? And could there be a risk that Japan returns back to this sort of revolving door of prime ministers again?
Yeah, and I don't think necessarily the lack of factions means a return to the revolving door. The factions have been in play in previous periods when we've had one prime minister every year. So I don't think that's the only issue. I think a bigger problem is that the same political party has been in power in Japan for most of the period since 1955. And although the party evolves, it doesn't offer anything particularly new to Japanese voters. And there's no real sort of blue sky thinking about how to get Japan out of this 30-year rut. And I think it's that lack of sort of innovation on policy that leads prime ministers to lose their popularity very quickly with Japanese voters, which is why we see them then pushed out of the door. So we've had prime ministers before that didn't have their own factions. I mean, Prime Minister Abe was actually factionless when he first became prime minister in 2012 for his second term. And he went on to be Japan's longest serving prime minister in the post-war period. So I think we can overemphasize what the difference of the factions dissolving really means to Japanese politics. And unofficially, those who were part of the same faction in the past are sort of grouping around particular candidates, with the former Abe faction supporting Takaichi and a lot of the Aso faction, which actually still does exist, supporting Konotaro. So I think factional politics in an unofficial capacity still exists. And also factions are not always the reason why politics is stable or unstable. There's many other factors.
I think exactly to your point, Tina, about the LDP not being known as a party for blue sky thinking. Do you think that a new Prime Minister on the way changes public perceptions around the LDP? I mean, Fumio Kishida is someone who's not seeking a second term because of his declining approval ratings.
Yeah, I mean, I think his declining approval ratings are very much connected to all of the political funding scandals that have engulfed the LDP in the past year. So I don't think those problems for the party disappear with a new Prime Minister. I mean, two of the candidates, Koizumi and Ishiba, are known for taking quite strong positions against corruption within their own party. They've both said that they would introduce stronger political reforms. But political reforms as a slogan is something we've been hearing in Japan since the 1990s. I mean, maybe even since the 1970s. And the slush money and the pork barreling doesn't really seem to change. So I think the public are actually quite cynical.
It's rare to see women that are running for this. I'm just wondering, Tina, I think if we do see, one of the women that are running to actually win this, I mean, do you think Japan is ready for its first female Prime Minister?
Yeah, I mean, I think Japan's more than ready for its first female Prime Minister. I'm not sure that the only female candidate who has a chance of winning, Takaishi, is actually very representative of the views of a lot of Japanese women, and she's very conservative. As far as she's concerned, women should not be allowed to be the Japanese empress. Married women should not be allowed to keep their original family names. So she's very conservative on what we might consider to be issues that may affect women more than other voters. So I don't know if she would necessarily be somebody that a lot of women in Japan would be happy to see as Prime Minister, given her conservative views, especially younger women who I think are much more progressive. I mean, Japan is generally a lot more progressive than the LDP.
Tina Burrett, the Assistant Professor of Political Science at Sophia University. Thanks very much for your insights. And as we said, we'll have more on that LDP vote later throughout our shows. But just some breaking lines crossing the terminal now relating to chip maker ARM, or chip designer rather, ARM, and also Intel. So as we know, Intel's a company that's had a rapid decline in its share price over the course of this year. There's been a lot of takeover speculation as well. And we're hearing from sources that ARM, which is majority owned by SoftBank over in Japan. It makes a lot of its revenue from selling chip designs for smartphones. But we're hearing ARM approached Intel about potentially buying its product division. Now, the makeup of Intel, there's two main units. There's the product group, which is the one that's in focus here. It sells chips for PCs, services, networking equipment. And then you've got another that operates its factories. And we're reporting last week and this week about how Intel is making its fab subsidiary totally separate now from the business. But we're hearing ARM approached Intel about potentially buying its product division, only to be told, Yvonne, that that business is not for sale.
All right. That'd be pretty interesting. We'll see how things do when, of course, Intel and, of course, the U.S. markets open as well. In terms of what we're talking about when it comes to this LDP election, it's interesting, right? When we talk about these candidates, how they have different views on where interest rates are going to go, for example, and really markets seem to have their different sort of analysis on what impact it could have on the yen, stocks alike. Let's bring in our Japan equities reporter, Aya Wagatsuma. Aya, tell us a little bit more about the sectors that investors are looking at around this vote and what is going to be the outlook for Japanese stocks moving forward.
Great. Thank you so much for having me. A lot of market participants are very interested in the monetary policy views from each candidate. And should it be an Ishiba or Koizumi win, they are hawkish on the monetary policy views. So that would mean that the yen would strengthen, interest rates could potentially continue to go up, and that would hurt exporting sectors, and the Japanese stocks could fall. But on the other hand, if it is a Takaichi win, she is very dovish on monetary policy views. So the yen could weaken, and because Japanese stocks are made up by so much exporting companies, Japanese stocks could again start to go up. and there would be lower interest rates. So those are and sectors that we're watching: exporting companies with the yen currency moves, as well as the banking sector. That could be another point of interest for many market participants. As interest rates go up, Japanese banking sectors will also benefit from that. So a lot of people are watching banking sectors and financials as well.
There are, of course, a lot of differences. I mean, we've got a record 9 candidates contesting this LDP election, but at the same time, there are similarities between them as well. So which sectors are you looking at to benefit here?
So most actually, all of the candidates are very keen on restarting nuclear power plants. So that would mean that the energy sector could definitely be of interest for market participants, especially companies like Tokyo Electric or even Hitachi or Mitsubishi Heavy, who have been very keen on energy. And also, most of the candidates are also very supportive on raising defense budgets. And in the Kishida administration, they have actually gone through a record budget for the fiscal year starting in April. So a lot of defense companies are on the watch. For example, Mitsubishi Heavy Industries or IHI, those are companies that have been going up as well. So those are sectors that people are watching at the moment.
Aya Wagatsuma there in Tokyo. That was our Japanese equities reporter. Thanks very much for your insights. And of course, you can turn to your Bloomberg for more on this. Go to TLive Go to get commentary and analysis from our expert editors. That LDP vote very much in focus today. We're expecting the decision and a press conference within the day as well. So more ahead. This is Bloomberg. Well, this is the most read story on the terminal over the past several hours, Yvonne, and I'm not really surprised. I mean, there's so much optimism around Chinese equities, but this is the comments that we got from David Tepper, rather. He was in a CNBC interview, but speaking about what he's thinking around the Chinese stimulus measures that have been announced so far. And off the back, he's saying he's buying everything that's related to Beijing.
He said ETFs, futures. He's going all in, as some have said that policymakers have gone all in when it comes to stimulus measures as well. So everything related to China after we heard from policymakers this week as well. It seems to be that you're getting more of the sort of non-consensus calls turn more consensus, right? I guess, the likes of Michael Burrett, as you talked about, have actually held their positions in China for some time. But you're starting to see hedge funds really coming back in a big way. I think hedge funds had one of the biggest activities that we've seen since March of 2021, I believe, in the last few sessions or so. So the hot money certainly is coming back. And he says, look, he usually has limits, historic limits. I thought that was interesting. I probably said a long time ago, I don't go above 10% or 50%. That's probably not true anymore. He says he has a newfound limit in this pullback.
Yeah, and to your point, I mean, Goldman Sachs, for instance, have been saying that they've been seeing big inflows. And what Winnie Wu was saying earlier from Bank of America, Securities, that in the short term, there's areas of the market that you can go into, consumer, property. Still, it's a beta play.
Yeah, and you talk about what the risks are. Like, there's still people that are saying, well, let's get a reality check, right? We'll see if this all follows through. We might be met with disappointment once again. Another argument is we still have this U.S. election to deal with as well. Maybe this is just a short-term bounce until we get into November or even next year. But I think David Tepper had an interesting line. He goes, I don't care about that. I don't care about the geopolitics. He says, this is internal stimulus, and the fiscal stimulus is going to encourage consumption. So, yeah, certainly very, very bullish words from Mr. Tepper himself.
Well, I think about valuations as well. These stocks are incredibly cheap. But let's take a look at also what we're seeing intraday so far for the Hang Seng. You're up 2.5% right now. It is a very broad-based rally that we're seeing. Lots of different sectors, particularly in the consumption story. That big push around stimulus is playing out in particular. But Trading volumes as well, those are absolutely spiking. We're at levels now that we haven't seen going all the way back to 2011, but certainly you're looking at multi-year highs on these indexes.
Yeah, so volumes are up. Shanghai Composite, for example, is back above 3,000 for the first time since June. And of course, we talked about CSI 300, set for the best week since 2008 now, just adding on to the gains and momentum in this rally. Are we finally able to cheer into the weekend? Seems like it. We're going to leave it here. Bloomberg Markets Asia is next. Have a great weekend.